Hey, good evening, all. I welcome you all once again to my channel. My name is Sunday. Today, I'm going to be sharing with us a graphical representation of the candlestick patterns that I've taught us earlier, and to explain to us again more details and to throw more light on the way they function, on what they represent in the forex market. Because like I said, it is the language that we speak in the forex market. Candlestick patterns is everything therein in the forex market. Like I said, my name is Sunday again. Please subscribe and follow me on YouTube and Facebook. My YouTube channel and my Facebook page. Here is the YouTube channel, and this one here is my Facebook page. The last one here is my email, so you can send me an email while I respond to you if you have any question. And if you want me to coach you one-on-one, you can as well, let me know. Yeah, as we can see, we have the bearish and bullish engulfing candlestick patterns, like I have taught us earlier. Here, this one is the bullish engulfing pattern. You can see we have the red candle, which carries the color of the current trend. When the trend is coming down from the top, is coming down, that means the price of currency that you are selling is coming down. So like I told us, when the price is coming down, we go short. That is, we sell currency, and as soon as the thing keeps coming down, it will get to a support level, which is the downside. As the price is coming down, it will get to a level where this candlestick formation will appear. And as soon as this one is fully printed like this, then the next bear market, which is the green candle here that we see, that represents the change of character, that represent bearish signal that is about to change. Once you see this, you know that the current trend is fading off, and a new trend is about to take over, which is the trend is about to start going up. That is, the price of the currency is now getting ready to be going upside. So you see, as soon as this thing forms, once this very one closes, you just place your entry above this, you go long. That is how it is. That is why it is called bearish reversal. This is bearish, is now reversing it to become bullish. In another way, if you look at this other side here, we call this bullish, we call this um, bearish reversal, This is the bearish reversal. Bearish reversal, this meaning that as the price is going up, as the price is going up, it will get to a level as the price is going up. Once this one finish printing, it will get to a support level. This one will appear, this candle here, the bearish candle will appear. Once it appears like this, that means there is what we call change of character. The trend is about to change. That means the current trend was going up. It get to a resistant level at the top. This formation will happen. That is to tell us, to signal us that we are now in the period of change of character. This candle will appear. As soon as this candle closes, you go short. You are preparing to start selling your currencies. That means before this one finish printing, you take your profit. At the same time, this one, before it finish printing, before the price reverses, you take your profit. Because if you don't take your profit at this point, once this one start printing up, the amount, your profit is depreciating. And if care is not taken, it will roll back and hit your stop loss. That is how it is. Then the key point here that we are to note is that bullish engulfing candlestick pattern is a bearish reversal signal. It usually form or appear at the support level in a downtrend, which is this. Then the bearish engulfing, which is this one, is a bullish trend reversal signal. And it also usually forms at the resistance level in an uptrend. Then we'll talk about the Dodgy candle patterns. Dodgy candle is an indecision pattern that signifies equality between buyer and seller at a specific period in the financial market. So what does that mean? Once you see a dodgy candle, at that point, there is equality. No one is in charge of the market, neither the buyer nor the seller in charge of the market. You just see price static at that level, meaning that there is inequality. The buyers, they have not decided to push the market upward, neither the seller, neither have they decided to push the market, the price downward. So a dodgy, it's an indecision candle. Anytime you see that, you just get yourself prepared. It is possible for a trend to change at that point, or it can still continue. But once you see it appears, there is an indecision. The formation of a dodgy candlestick pattern simply alerting us that the current trend, be it downtrend or uptrend, is indecisive on whether or not to push the price further. Hence, change of character is about to happen. When this formation takes place during or in the direction of a current trend, it could also signal a period before continuation of trend. Like as I explained to us, if a trend is going up, if the price is going up, it can get to a level that that indecision candle can come in, that dodgy candle can print. Once that dodgy candle print, it's just a period that the current trend, that is maybe if it's going up, that means the buyers, they are contemplating whether to push the price higher or to just relax and let the sellers take over. So once after the dodgy candle finish printing, if they have decided to push the price more higher, then a bullish candle will surface, then the price will start going up again. So it can still act as a continuation of trend. Then the key point here is that dodgy candle is an indecision candle. We should put it in mind. Anytime we see dodgy candle, we know that it's an indecision candle, and it signifies equality. No one is leading at that point, in neither the buyers or the seller. Dodgy candlestick signal a period of rest before continuation of a current trend. Like I explained to us, once you see it, it's just like when you breathe in, it will get to a point you have to breathe out. So it's just like a period of rest. As the price is going up or going downward, it will get to a point the current trend will cease for a moment. The price is no longer going down or going up. So it will cease at a that specific period. The price will remain at the same level. Once the dodgy candle finish printing, then if the current trend decided to, okay, they are still ready to move downward, they will start pushing the price downward. Or if it is a current trend that is trending up, at that point they can, continue pushing the price, upward. A dodgy candle signals you to get ready because change of character is about to happen. Here, we have different types of a dodgy candle. You see, this one here, you see a dodgy candle here that signals a downtrend. You see it. This trend was going up, then this candle appears. At the end of the day, you see the trend coming down, bearish. So once you see a dodgy candle, it also signifies a point of entry. That is why when you as a price action trader, you need to know all these things. You need to be very, very acquainted with all those things. Once you see a candle, you know the psychology behind it, the reason for the formation. That is all it takes to be a good forex trader. So once you see a dodgy candle, a trend might be going up like this. It could be one candle, another one, another one. But it will get to a point, this indecision candle will come up. As soon as you see this, you wait for it to close. Then the next one, once it starts like this, all you need to do, you wait for this one to be fully printed, for you to be clear of the formation that yes, now the bears, that is the sellers, they have taken over the market. As soon as it is fully printed, here on top of it is where you place your entry. Place an entry, put your stop loss down here, at the downside of the dodgy candle here. Then in case of an uptrend, now you see, this is a bearish candle. As it's coming down like this, it gets to this point. Instead of another candle like this to start printing, you see something like this. As soon as you see something like this, just be on guard, be at alert, because the about change of character is about to start. Now, before it is valid, what will make it valid is after this one is printed, you will now see a bullish candle here. The bullish candle will start printing. But mind you, forget about this color being green. It could be red as well. It can print this bearish candle like this and still print this this dodgy candle as it will carry this same color, just like this. So it doesn't really mean anything. But the most important thing is that it will close, it will close almost at the same time where it opens. And that is just it. As soon as you finish printing, depending on your time frame, you now watch this one too to start printing. Let it be fully printed. Once it's fully printed, before another one starts, you just place your entry here, put your stop loss down below here. You can you decide where to put your target. You know when to take profit. So that is how it is. Then we have types of dodgy candlestick patterns. We have the dragonfly that I have explained to us, and the gravestone dodgy candle. We have two types. So the dragonfly dodgy is a bearish trend reversal to the upside and usually form at the support level. It has a long wick pointing at the support level. Also signifies buyers rejecting price at that support level, and they are getting ready to push the price upward. Opening and closing price almost the same level, because it's small where it opens and where it closes almost the same. It also has a very small body, you know. In the same vein, we have the gravestone dodgy. The gravestone dodgy is a bullish trend reversal signal. Usually occurs at the resistance level with the aim of price rejection to the downward side. It has a long wick pointing at the resistance level with a very small body. Opening and closing price almost at the same level. Don't worry, the next slide you will see the graphical representation. Yeah, this is it, guys. Dragonfly are gravestone dodgy. Now you can see this is a dragonfly that I told you that it is a trend, a bearish trend reversal to the upside. You can see this is a bearish trend. The red candlestick like this, even if this green is in between, it does not really matter, because this one signifies a bearish trend from the left side going down. A bullish trend start from the left side going up. So that is how it is. Now you can see it got to a point, this one printed. Now He opened here, he pushed the price down to this point. But before the candle closes, buyers came and pushed the price up to this point. So it closed almost the same point where it opens. Then the next bear market was, you now see, the next bear market you see is a bullish candle. A bullish candle. That means now the buyers are now ready to push the market. They've taken over from the sellers. You can now see, you see, once this one close, before this one will start, you just place your entry here, put your stop loss down. Then your target, it should be anywhere up this side. You decide where to take target. When it gets to that, you know, that time I will teach you how to, locate where you should take your profit. Then another one is the gravestone dodging. That is the second one. You see, the buyers started pushing the price up like this, started pushing price up. But when they got to this level, as soon as this one closed, this candle here, the gravestone opened. Then the buyers pushed the price up to this level. Before this candle closed, sellers came and returned the price back down to this side. And you now see that the candle closed almost the same level where it started from. That means the sellers rejected the price and said, oh, you know what? We cannot allow the price to go be above this price, above this level. So as soon as this one closed, the next bear market must be a bearish candle. That means this one now is not telling you, yes, sellers are now ready to play. They are now in charge of the market. So all you need to do, as soon as this one closes, place your entry here, your stop loss at the back here, you take your profit this way. Then you now see sellers pushing the price downward. So that is how it is, guys. On this note, we are going to stop here, and I will urge you guys to, as I furnish you guys with a very quality information, and I want you to learn this thing in a very simple and easy way. That is why I'm doing my best, to make sure that I keep it real simple for you guys. So it's like I told us, this is a skill that anybody can do, but what it requires is interest. Even if you are already pensioned, since you have your laptop or you have a phone, in fact, it's the best time for you to trade because you no longer go to work. Even if you have another business that you are running as a pensioner, this is a good business for you. All you need to do is acquire the skill. And how do you do that? Follow my YouTube. All the videos that I'm uploading, all the information that I'm feeding you guys with is for free. The only thing you need to do is follow the video one after the other. And before you start watching any video, get a pen and a paper so that you can take note. You cannot store everything in your head, so you need to always take a pen and a paper anytime you are watching my video. These are quality information, the right information that you need to become a trader from the scratch to a level where you can start making profit, and to a professional level. And I promise you guys that I'm going to feed you guys with every information that you will ever need as regards to trading forex, currencies, indices, cryptos, even futures. You know, so on this note, I will urge you guys to subscribe to my YouTube channel. All you need to do is just hit the subscribe button. It's done. You don't need to start feeling anything. Hit just the subscribe button. Then hit the like button. You share it. If you have any comment, don't forget to drop it at the comment side. If you want to send me an email personally, send me an email. If you need one-on-one coaching, that I'll be live with you, coaching you. If you need any private coaching, contact me directly. My email is there. You contact me directly. And this skill is not limited to just men alone. Both men, women, anybody can do it as long as you have a phone with an internet. So it's just it. You don't need capital. Or the only thing you need, first, you need to register with a broker. By the time we get to that level, I will put you through. Register with a broker. It does not necessarily mean that you have to register with my own broker. No, you choose your own broker yourself. Create a demo account first. You will now be using that to practice. Once you see that you are okay, just like somebody who just bought a car, doesn't know how to drive, you have to learn how to drive. By the time you now see that, okay, you are now perfect, you can now drive alone, go out and, like that. It's like that. So you use the demo account to practice. By the time you are now okay, you now have confidence you're on yourself, you will now create a live account, a personal account that you will now be funding. Then how do you fund it? It depends on the amount that you have. You can start with $50, you can start with $100, any amount, you know. It's like that. It's a very simple thing. And before you know it, you start having another source of income, no matter how little it is. So it's like that, guys. I wish you guys well, and don't forget to subscribe to my YouTube channel, hit the like button, share it, drop a comment if you have any comment, send me an email if you need a one-on-one coaching, and that's all. I wish you guys all the best, and bye for now.